The Reserve Bank of India has released its much awaited change to the guidelines for debt restructuring. The scheme is S4A, and bankers were eagerly awaiting to see whether the RBI provides them some relief. Well, they've got some good news and some not so good news. The good news is that the RBI has eased the provisioning requirements, which will give some relief to bank balance sheets. Essentially, what the RBI has done is said that once you segregate debt into the sustainable part and into the unsustainable part, the sustainable part can get upgraded to a standard asset almost immediately. Now, what does that mean? Earlier, the scheme had said that you have to wait for a year to ensure that the account is regular in making repayments, and then you can upgrade it from whatever it was classified as, which in some cases meant that if it's an NPA for another year, it would stay an NPA and only get upgraded possibly after that. Now, the RBI is saying that the sustainable part of the debt, which is at least 50%, can get upgraded to standard category immediately. That will mean that the NPA numbers could show a drop, and also the provisioning requirements could show a drop. Now, that's the change that has happened. The changes that have not happened are two major ones. Bankers had asked the RBI if less than 50% of the debt can be classified as sustainable. The RBI has said nothing on that. Silence speaks its own language. And the other thing that the RBI has not done is given them flexibility in structuring the payments of the sustainable part. So again, those 2 points of relief have not been granted to banks. There were some other tweaks that have come in the strategic debt restructuring rules. The RBI has defined how control should be looked at, and the person who's coming in, the new management, should have control as per SEBI's definition of control. There is some ease coming in on the 525 rules as well, which allow banks to extend the tenor of a loan. In that case, they have said that that scheme can be applied to all sectors. Earlier, it was restricted to infrastructure and core sectors alone.